Hello and welcome to the paid weekly recap for the week ending October 3rd, 2025. I'm Keith Harwood, CIO of Yellow Tunnel, and also pictured as Vlad Karpel, the CEO and founder of Yellow Tunnel and the creator of the artificial intelligence behind the predictive AI for dynamic market system. Before we get started, normal disclosures: options involve substantial risk and are not suitable for all investors. Yellow Tunnel and myself are not investment advisors and not registered with the SEC nor FINRA. If you do have questions about your own personal financial situation, please consult with a registered financial advisor. The information in this presentation is for education and information purposes only and should not be considered trading advice. And finally, myself and/or the team at Yellow Tunnel may have a financial interest in the securities presented and the trade picks. If you do need more time with the disclosures, please go ahead and pause the video here. Otherwise, we'll get into the recap of the week. So the big story of this week was the government shutdown. That was looming Wednesday night. It went into effect, or early Wednesday morning, I suppose. So at the end of the day, we had this government shutdown, and the reaction was risk off. It's time to get out. We've got problems. And yet, then after the government shutdown went into effect, the market turned around and started buying. Why did we start buying? We don't know. But the 10-year yield, well, we'll get back to that, I guess. But the 10-year yield initially started to fall and then stabilized around 4.1. Another non-move in the 10-year yield. At the end of the day, it looks like the market is basically saying this isn't going to have an impact on the economy for the long haul, nor really on Fed expectations in the short term. And that was the reaction for the market. The initial dip was bought back up as people started to realize that lack of new data, lack of non-farm payrolls, lack of other fundamental inputs means that we really can't shift the Fed's expectation. The Fed's going to have to cut rates this month. Um, and cutting rates is good for the bull. So the bull bought. And after initially pushing to a new high on Friday, we did see some profit taking just for the weekend risk, it appears. But at the end of the day, there's buyers and there's a lack of sellers and there's a lack of news until we start to get into earnings season in the next couple weeks. So as long as things just continue to chug ahead and things look like they will eventually get cleared up for the government shutdown, I think the market's going to go ahead and take that bullish. If this government shutdown starts to look like it's going to take a long time, that may shift the tone. Tech as well made a new high on Thursday and then a new high on Friday before actually having a bit of a negative reaction on Friday. So Friday, we actually saw a outside day, a new high, a higher high than the previous day, and a lower low, and then closing near the lows of the session. That is a bit concerning as there was a little bit of risk taking, or risk off taken. But at the end of the day, it seems like this market still wants to go higher, and there is general money flow, especially into semiconductors, which is broadly a bull indicator for tech. And then finally, small caps. Initially, basically no reaction, but then on Friday, we did start to see some bullish behavior. We saw some risk off in financials that again got bought back up. We saw some actual strength in healthcare companies as there was a preferred pricing plan put into effect for Pfizer, for example, and that seemed to be a very big benefit to the entire healthcare sector. So small caps made that new high on Friday. Again, it looks like from the chart, it's a rosy picture with very little news, even though there's a lot kind of going on in the background with government shutdown, still tariffs to work through, and Fed policy a little bit in question. And as a result of that background concern, the VIX remains elevated. Usually, when we're seeing a new high like this, I would expect the VIX to be testing a new low, but there is a desire to continue to be hedged. So people are continuing to buy puts just in case. And they're not selling calls to finance that. They're just buying the puts, putting on a hedged position for the downside, and leaving the upside unconstrained in case of a major bull run. That hasn't necessarily worked for the last few months. Dips get bought quickly, so the puts never really pay off. Calls need to be sold because we're not going higher faster, but that's just not the way the investment community is approaching this. We're not financing the hedge. They're just buying the hedge. And I think that over time, maybe that starts to, hurt a bit more. Um, but maybe right now that hedge presence is allowing investors to actually buy a little more aggressively on every dip. And so maybe that is the way that they're getting that benefit. So right now, market's been moving at a very much slower rate than the VIX, and yet the VIX keeps getting bought because people continue to hedge. Now we should start to see that VIX come down. Again, as we start to see some earnings announcements, not this upcoming week, but the following, that's going to help allow for even cheaper leverage and greater potential returns when if and when we do go into a pure bull market. But at the very least, it's still providing reasonably priced risk protection and reasonably priced leverage. And we do expect to see some paid trades in the upcoming week, even though we had none last week with all of this question mark and a lot of noise potential for the market that's just basically being disregarded. Same point, our live trading room has continued to work very well. We've had a lot of great ideas in there. So be sure to join us. This week, we're going to be morning bell only. So if you can join us in the morning bell from 9:15 Eastern until about 10:15, 10:30 Eastern, we can talk through ideas, the new ideas in paid, the other ideas that are popping up from the AI generated signals. So we've got a lot of good information out there and it continues to show strong results. So make sure that you're jumping in on that, asking questions as they come up. We can evaluate just about any stock and see if there's an interesting trading opportunity outside of the normal AI generated ideas as well as the normal paid ideas. So please be sure to join us. And if you do have questions, always feel free to email us. I'm Keith at yellowtunnel.com and Vlad is Vlad at yellowtunnel.com. Thanks again, everybody. We'll have a great week coming and keep an eye on your inbox for new ideas this week.